Udayant Malhoutra is the CEO and Managing Director at Dynamatic Tech, which is actually a buzz in trade today as they've inked an MoU with a Russian company. Let's bring him on board to talk a little bit more about the outlook. Great to have you, and thanks so much for joining in. Now, while sharing with us the key takeaways for the Aero Show for you, can you also tell us a little bit about this MoU that you've signed with JSC Russian Helicopter?
Yes, as you're aware, we are producing aerostructures for a variety of companies and customers. We've been producing major aerostructures for the Sukhoi 30, which we've been producing for HAL. And then we have very large export programs where we produce products for Airbus, Bell Helicopter and Boeing. And we don't just produce stuff for fixed-wing aircraft, we also produce a lot of stuff, for example, for Bell Helicopter, major structures for the fuselage. So Russian Helicopters has been chosen by the government of India for production of 200 odd helicopters for Indian requirements. And the government of India set up a joint venture between Russian Helicopters and HAL for this production. The agreement we've signed with them is really for the major aerostructures for the production that will commence late next year. That's our anticipation. So it's good. It's an extension of our existing business with a new customer.
Fair enough. So will there be a transfer of technology from the Russian partner, or will it be developed in-house?
Well, every aircraft build has very unique processes and unique configurations. So there'll be very specific transfer of the processes and the manner of work or the style of building this aircraft in the Russian way. And but we've been building Sukhoi 30 structures for 15 plus years, and we have extensive knowledge of how aircraft are built in Russia as well, not just Western aircraft. So it's an extension of what we do.
All right, so how are your three core segments, aerospace, automotive and hydraulics, doing right now?
Well, the hydraulics business has been growing very well because we're a very dominant player in that market, particularly for agricultural machines like tractors, which have been doing very well. Also, we produce a number of products that go into construction equipment. Those have been, with road construction and building works going up, and more than that, it's also the mechanization of the processes. So, you no longer have women carrying cement on their heads. It's all done by machine, and there's a lot of hydraulic work. So the hydraulic business has grown very well, and we have very robust growth ahead of us as well.
Okay. Now, for the 9 months of this fiscal year, revenue has grown nearly 18%, adjusting for the discounted aluminium casting operations, while your net profitability as well as your operating numbers have improved quite significantly. What kind of revenue growth, what kind of EBITDA margins are you going to see for FY 20 to 21?
I really won't share guesstimates, but we are in a good zone because, and I'll just tell you why. If you look at it, we sold the aluminum foundry. Yeah, I won't give you a number, but I'll give you two very significant things that have happened. One is we sold, and this is in the public sphere, so we sold a business that was losing money for many years, and we got the full value of the asset, and we sold it very quickly in a good way. So that drag on our earnings will go away. We were losing at the EBITDA level about 8 crores a year in that unit, which with the capital employed translated to almost 20 crores at the PBT level. So that's gone. So that should accrete and improve the business profitability in the immediate quarters and year ahead. And the second thing that has been significant, and you can see that again, is the aerospace business. We've, for the last 3-4 years, we were building up these major programs for Bell Helicopter, Airbus and Boeing, and we were ramping up. And now you can see the numbers stacking up every quarter. The numbers have grown, not only in sales, but they've been a massive contributor to profitability as well. And I think that is the significant change. It's not so much the top line, but the constituencies, the different, the sales mix that has changed. So we've gone from 6 quarters ago, 24% of revenue was aerospace. The immediate last quarter it was 31%, where you have much better margins. And similarly, we've dropped the automotive business volume of sales, where your margins were much lower. So what's happening is the sales mix is much more profitable now, and that will continue over the next few quarters.
All right, we'll let you go on that note. Thanks much for taking time out and joining in, giving us a heads up on how things are shaping up and what exactly this MoU means for the company.